Welcome back to Today Assets Report, the channel where we break down everything happening in the world of crypto, markets, and money so you can stay ahead of the curve. I'm so glad you're here today because we have a packed show, and honestly, some of the news we're covering right now is the kind of stuff that could genuinely change the trajectory of XRP and the broader crypto market for years to come. So do me a favor. Smash that like button, get comfortable, and let's get into it because we are not wasting a single second today. Right now, XRP is sitting at $1.36, up about 0.32% on the day. Now, I know some of you are looking at that number and thinking, that's it? That's the big move? But hold on. Before you write off this price action, you need to understand what's actually happening underneath the surface here. XRP has been bouncing back and forth between two key levels, a support zone down around 127 and a mid-level resistance zone sitting right around 134. That dance between support and resistance is actually telling us something very important about the market's current psychology. The buyers are there, the demand is there, but there isn't quite enough force yet to push through that ceiling decisively. And that's the story of the entire crypto market right now, not just XRP. Bitcoin is sitting at $68,000 after tapping resistance up at $73,000 and pulling back. Ethereum is hovering back below $2,000 and Solana is trading around $84.26. The total crypto market is down just 0.06% on the day, which sounds mild, but when you zoom out a little, we've actually shed about $169 billion, roughly 6.8%, over the last 2 days alone. That's not nothing. That's real money leaving the table. And it comes right after we had a really nice pop on strong ISM economic data. So what does that tell us? It tells us we are in a very specific type of market environment right now, and you need to understand how to navigate it if you want to come out ahead. Here's what I've been calling a springboard market. And I want you to really pay attention to this because this pattern has been showing up over and over again in recent weeks. What happens is we get a piece of good news, something that legitimately should push prices higher, and the market does pop. You see that nice green candle. Everybody gets excited. And then, almost like clockwork, the sell-off comes. We saw it after Circle's strong earnings a couple weeks back. We saw it after the ISM numbers. Every single time there's a catalyst, we get a move up followed by a fade back down. That is the springboard pattern, and the algos are driving it. The big algorithmic trading systems are not buying and holding right now. They're waiting, they're sniffing for catalysts, and then they're using those pops as opportunities to offload. That's the market we're in. Now, here's the important thing I want you to take away from that pattern. It cuts both ways. Yes, it means you can't just buy on good news and expect it to keep running. But it also means that every one of those pops is a potential opportunity if you're nimble. If you see a catalyst, you understand the likely move, and you know when to take profits, you can actually do very well in this kind of environment. Our partners at BYDFI give you the ability to go long or short on the market, which is exactly what you need when you're dealing with this kind of two-directional volatility. They're also running a promotion right now where traders on the platform can earn a significant amount of XRP just for trading. Link is in the description below, and as always, please trade responsibly. Let's talk about what the Fear and Greed Index is telling us because this is really important context. After briefly climbing up to 22, which is still deep in fear territory, but at least it was movement, we've fallen back down to 12. 12. That is extreme fear. And what's interesting is that every time a piece of news hits, whether it's something from the White House, a development in the Middle East, or a fresh economic data point, the algorithms react almost instantly. They're programmed to hunt for these signals and respond accordingly. The result is that any optimism in the market gets crushed almost as fast as it appears. This is why we keep seeing the pattern of a good day followed immediately by a sell-off day. It's not random, it's structural, and it's being driven by the biggest players in the game. Speaking of the biggest players, let's talk about Jane Street because this is a story that keeps coming back up, and it's important that you understand exactly what's going on here. Jane Street, the massive trading firm that was previously accused of insider trading during the Terra Luna collapse and flagged for systematically dumping Bitcoin at 10 a.m., is still very much active in this market. In the last 24 hours alone, a wallet linked to Jane Street deposited 270 Bitcoin, worth about $19 million, to Bullish and LMAX Digital. Their wallets are being tracked now. The crypto community knows what to look for. And what we're seeing confirms that while they may have changed their approach after getting called out, the activity itself has not stopped. They're still moving size, still influencing price action, and still doing what large institutional players do in markets that lack robust oversight. Here's something I want to address directly, because a lot of people got very excited a few weeks back and started saying that the reason the crypto market was pumping was because Jane Street had stepped back and stopped suppressing prices. That narrative was everywhere. It was on Twitter, it was in YouTube videos, and people were genuinely convinced that this was the catalyst. But I told you at the time, and I'll stand by this, that the pop we saw was driven by Circle's strong earnings report, not by Jane Street going quiet. The algos saw those earnings, recognized them as a positive signal for the broader crypto ecosystem, started buying, short sellers started getting squeezed, and prices moved. The Jane Street narrative was a story people told after the fact to explain something that had already happened. That's how a lot of market analysis works, unfortunately. People see the move and then reverse engineer a reason. Now let's get into the stuff that is genuinely exciting, the big picture development that has the entire XRP community buzzing today. And it has everything to do with Elon Musk and the official launch of X Money. Here's what just happened. A select group of X users have begun testing the X Money beta, and it is now officially live. These testers are completing instant peer-to-peer transfers, making deposits, requesting money, and accessing features like a high-yield savings option, links to external bank accounts, and custom debit cards with cashback rewards. The platform is backed by Cross River Bank, and yes, this is the same Cross River Bank that has established connections with Ripple, and it is FDIC insured. This is not a concept anymore. This is real, and it is happening right now. The vision Elon Musk has for X is essentially what WeChat is in China. An everything app where you can message, post, shop, send money, pay bills, and handle your entire financial life without ever leaving the platform. If you've ever been to China or talked to someone who uses WeChat daily, you understand how transformative that kind of integration is. Merchants have QR codes, you scan and pay, no registers, no card readers, no friction. That frictionless financial experience is exactly what Elon is building in the West, and X Money is the first real step toward making that a reality for hundreds of millions of users right here in the United States. And when you consider that crypto integration is reportedly the next logical step in this roadmap, the implications for XRP are enormous. Now you might be asking, and this is a great question, exactly how would cryptocurrency be integrated into X? Here's what we know and what makes sense based on the current trajectory. X has confirmed there will be crypto trading functionality, but it sounds like you won't buy crypto directly inside X. Instead, you'd be redirected to a third-party platform to execute trades. However, and this is where it gets really interesting for XRP holders, peer-to-peer crypto transfers between X users could happen directly within the app. Think about what that means. If X facilitates USDT transfers or XRP transfers between users on its platform, you are instantly introducing cryptocurrency utility to what could become one of the largest financial apps in the world. The user base alone makes this a massive deal. There's an interesting technical question around how exactly these crypto transfers would work on X. Would X maintain its own internal ledger, where your crypto balance lives within X's system and transfers happen off-chain between users? Or would every transfer settle directly on the blockchain with all the transparency and decentralization that entails? My instinct says it will go through the actual blockchain. That's cleaner, more trustless, and more aligned with what crypto is supposed to be. But the gas fee question is real, and it's something the team will need to work through, especially as they think about micropayments and casual everyday transactions. These are solvable problems, and given the regulatory environment right now, they have room to work through them without the kind of heavy-handed interference we might have seen 2 or 3 years ago. And that regulatory environment is something we absolutely need to talk about, because the White House just dropped something significant that has huge implications for crypto and for XRP specifically. President Trump's new cyber strategy for America has been officially released, and it explicitly identifies cryptocurrency and blockchain technology as strategic assets that the United States must secure and lead globally. Blockchain is now being mentioned in the same breath as artificial intelligence, quantum computing, and cybersecurity as critical infrastructure for the future economy. The administration is also committing to removing what it calls burdensome regulations so that innovation in these sectors can move faster. This is not a vague endorsement. This is the United States government officially placing blockchain technology in its highest priority strategic tier. That is a sea change from where we were just a couple of years ago. One more development that deserves real attention today: the emerging conversation around using cryptocurrency as collateral for loans without actually selling your holdings. This might sound like a niche financial concept, but it is genuinely one of the most important ideas in the crypto space right now. Here's the thing: wealthy families and institutions have understood this for generations. They don't sell their real estate, they don't sell their stocks. They use those assets as collateral to borrow against and fund their lifestyles and investments, all while continuing to grow their wealth and defer taxes. Cryptocurrency now has the potential to enter that same framework. If you can walk into a bank and use your XRP holdings as collateral to secure a loan, whether for a house, a car, or a business investment, without triggering a taxable sale event, that changes the entire value proposition of holding crypto. It transforms digital assets from speculative trading chips into legitimate long-term wealth vehicles. Here's where I want to leave you today, and I want you to really sit with this. Yes, the market is choppy right now. Yes, the fear and greed index is sitting at 12. Yes, we're seeing these frustrating good day sell-off patterns repeat over and over again. These are short-term problems. These are liquidity issues. These are the algos doing what algos do in uncertain environments. But pull back and look at what's actually happening at the macro level. The White House is officially designating blockchain as national strategic infrastructure. Elon Musk just launched the beta for what could become the most powerful payments app in the Western world, with crypto integration on the horizon. XRP is being discussed in the context of collateralized lending and real-world utility. And the regulatory environment in the United States is more favorable to crypto than it has ever been. Long-term, I am more bullish than ever. Thank you so much for watching Today Assets Report. Stay informed, stay patient, and as always, let's make a lot of money.